A lot of the focus of my work actually at ABARES lately has been trying to assess the impact on producers of the recent heavy rainfall and floods we've had in Eastern Australia. And one of the interesting outcomes of this work has been that despite significant losses of winter and summer crops, we're actually expecting average farm cash incomes for broadacre farms in Eastern Australia to be actually higher this year than last year. Now, the reason this result comes about, one of the main reasons for this, is that more agricultural producers in Australia are actually dependent on the outcome of livestock production than any other sector. So I want to start the presentation today by just quickly reviewing the contribution that livestock production makes to Australian agriculture. And then I'll talk a bit about our short and medium-term outlook for the livestock sector. This financial year, we estimate that livestock disposal via slaughter and live exports will account for around 30% of the gross value of agricultural production in Australia, and that's just over $14 billion. The biggest contributor to this, as you can see on the slide, it comes from cattle. This is followed in order by lamb, poultry and pigs. Live cattle and live sheep exports together account for around 7% of the gross value of livestock production, we estimate, this financial year. The big mover over the last 5 years has been lamb production. It's increased its share of that pie from about 11% in 2005-06 up to 15% of the total value of agricultural production. The actual real value of lamb production has increased by more than 30% in the last 5 years to just over $2 billion. But around 70% of this increase is due to higher prices, which probably doesn't come as a surprise, and Lee mentioned the sort of prices we're seeing now in the market compared to, say, a few years ago. It's quite dramatically different. For this financial year, we also estimate that the meat sector is expected to account for just over 1/5 of the total value of Australian agricultural exports, and that's around $6.6 billion. We also know that around 60% of farmers in Australia are involved in livestock production in one form or another. But behind this national figure, there are of course variations across Australia as to the relative importance of livestock production in different regions and states and areas. This map I've put up here sets out the proportion of all farms in Australia that are largely dependent on livestock in each state and the Northern Territory. Now, there's obviously regional variations within states, but leaving that to one side, it basically shows that there are more farms in the eastern states are dependent on livestock production than those, for example, in Western Australia or South Australia, because of the greater importance of cropping in those areas. And then when you take account of the fact that there are actually, of course, more farms in eastern states, then you can see the point I made earlier, is that basically more agricultural producers in Australia are dependent on the outcome of livestock production than any other agriculture sector. So with that background, I'd just like to first turn to our outlook for sheep meat. We're basically, as sort of Lee mentioned, very favourable conditions out there at the moment, returns for sheep meat producers, and we're expecting that's going to continue over the medium term. And there are two key factors driving this view. First is the reduced size of the Australian sheep flock, which you can see there, how the numbers are going down. And the second factor is the expected continued strong demand for sheep meat, live sheep for exports and for lambs. Now, on the supply side, we're forecasting the sheep flock will stabilise in the short term at around 68 million head, which remarkably is the lowest number in 124 years. And then we're expecting it'll gradually rebuild, and you can see by the slide there we've got a slight movement up, and we're projecting it'll be about 73 million head by 2015-16. Now, we're already seeing signs of this, and Lee referred to it in his introduction there, that with the very good seasonal conditions we've got in eastern states, there's a big demand for sheep for restocking. Adult sheep slaughter in the first half of this financial year is down 30% compared to the same period last year, so there's some evidence that people are building flocks rather than slaughtering sheep. And also store prices for ewes have reached record levels. This slide also shows we expect a continuation in the gradual rise in the proportion of breeding ewes in the sheep flock over the medium term, as sheep producers focus more on meat rather than wool production. Turning now to the demand side, we've seen lamb exports particularly grow strongly over the past few years, and they now account for around 46% of production. The United States has been the largest export market over this period, while the largest growth in exports has been to the Chinese market. In the short term, what we are projecting, which are in our report rather than on the slide there, a slight drop in lamb export volumes as producers rebuild flock numbers. However, over the medium term, export volumes are expected to recover in line with the projected increase in the sheep flock. In comparison to lamb, mutton is a much more export-orientated product, and exports currently account for around about 87% of production. Mutton exports have already fallen a bit because of this flock rebuilding dynamic that we've had going on, but they're expected to increase slightly next financial year, and we're projecting over the medium term that they'll grow on an average about 4% a year through to 2015. This growth we see is driven by strong export demand in the Middle East and the Southeast Asian markets for mutton. Now, if I draw both these supply and demand sides together, we're expecting average sale yard prices for lamb and sheep to be higher this year than last and still remain quite high over the medium term. The slight decline you can see there in real prices, which we've got there, is driven by what we expect is a slow increase in sheep numbers. Live sheep exports are expected to actually follow a similar pattern to sheep meat over the medium term. That is, with a continued gradual growth in export demand and higher returns in the short term, but with average prices gradually declining towards the end of the medium term as sheep numbers increase. But again, these are real prices, they're very high in historical terms. Now, just turning to the beef outlook for the beef, our summary of our beef outlook. Again, on the supply side, we're expecting lower than average cattle slaughter in the short term as producers take advantage of the very good seasonal conditions in southeastern and northern Australia to expand cattle herds. And as a result, the average weighted sale yard price for beef is forecast to rise by 11% this financial year and 5% next financial year. Basically, as Lee mentioned in his introduction, there's really strong competition out there for cattle at the moment between people wanting to rebuild herds and feedlotters and processors to meet export demand. Over the medium term, however, we are projecting that prices will ease as a result of increased cattle turn-off and higher slaughter as herd expansion tapers off. Now, on the demand side for beef exports, we're expecting moderate growth over the medium term, with our major markets of Japan, the United States and South Korea continuing to account for the bulk of exports. I mention this point because recently we've seen quite an increase in exports to other markets. For example, over the last 5 years, the share of beef exports going to other markets, other than these three major ones, has increased from around about 8% to 24% of exports. However, as we know, exports to some of these markets can be quite susceptible to variability, often due to government policy changes. And we witnessed that, for example, not long ago in the Russian Federation and, of course, more recently in Indonesia. Now, looking at each of those major export markets over the medium term in a little bit more detail, we're expecting exports to the United States to rise because of increased demand for manufacturing beef as US producers rebuild their cattle herds from the currently very low level they've got at the moment. For the Republic of Korea, we're also projecting a modest growth in exports, driven mainly by an increase in average household incomes. However, we expect the US beef will account for bulk of the anticipated increase in import demand for this market in the medium term.